So a lot of stock market folks, when you're looking at an investment, they like to say, make sure you do your DD, make sure you do due diligence. But what exactly is that? Because the common folk, when they take a look at the metrics, the ratios, they don't quite understand it, the PE, PB, PS. And so these videos, I'm trying to demystify that whole aspect so that you can glance at things and do fundamental analysis. Because I'm telling you, just a little bit of effort to understand these different metrics, and you're going to be a much better investor, and you're going to be able to actually do market research, fundamental analysis, DD, due diligence. So in this video, I'm going to be answering the question of what is market cap and enterprise value, how they differ, and when to use each one. So both of these are measures of the value of a company, and it's used commonly in fundamental analysis. Market cap, very simply, it's the current price multiplied by the number of shares outstanding. And usually you won't even have to calculate market cap, because any stock app that you use, if you Google a stock, if you Yahoo Finance a stock, you're going to see the market cap. It is a very readily available metric. And also, if you're curious on where to find number of shares outstanding, well, you can simply take the market cap divided by the stock price, and you're going to get the number of shares outstanding. But it's not very accurate, because the market cap, it does not take into account debt. And this is where enterprise value comes in. But even before that, I want to mention that a market cap, which is the current price multiplied by the number of shares outstanding, that current price, it's just dictated by demand and supply. It's where the buyer and the seller currently meet and say, you know what, this is a fair price, I'm willing to sell it, and I'm willing to buy it at this price. But the price fluctuates, and so the market cap, it really fluctuates with it. And when we speak of market cap, this is when you hear of mid cap, large cap, small cap stocks, micro cap. This is all has to do with how large the market cap is. If the market cap exceeds 10 billion, we refer to it as a large cap. If the market cap is between 2 and 10 billion, it's a mid cap. And if the market cap is between 300 million and 2 billion, it is a small cap. Anything below 300 million, consider it a Reddit to the moon type of stock. So remember just a second ago I mentioned that market cap doesn't take debt into account? Well, enterprise value does. It is considered a more accurate measure of the real worth of a company. So it's basically the cost that you would have to pay if you wanted to buy the entire company. And it takes a glance at short and long-term debt, and it also takes cash into account as well. So in order to calculate enterprise value, you take the market cap, you add the short and long-term debt, and then you subtract the cash. So let's break that down. Why is that the total cost of a company? Well, because you would have to buy all the shares, that's the market cap. Then you would have to go and pay off the debt, the short and long-term debt, but then you would have to subtract cash and cash equivalents. When you talk about cash equivalents, that's just anything that could easily be turned into cash or liquidated into cash. And so the enterprise value, it's considered the theoretical takeover price. So again, I want to cover, why is cash deducted from enterprise value? Because remember, enterprise value equals market cap plus debt minus cash. Well, think of it this way. If you're purchasing a house that costs $500,000, okay? But in that house, a safe that has $100,000 in cash comes along with the house. So you're paying $500,000 for a house that has a safe with $100,000 of cash in it. You're technically paying $400,000 because you're going to pay $500,000, but then immediately you're going to have $100,000 in cash. So technically you paid $400,000 for it. This is why cash is deducted from the enterprise value. And the same way, if the people who have the house, they owe a lot to the bank because they took loans out on the house, or however you want to think of it, you have to pay off those debts. And so that's why debt is added to the market cap and cash is subtracted. Now remember, when looking at market cap or enterprise value, make sure to compare it to another stock in the same industry. You want to compare apples to apples when doing side-by-side stock comparisons rather than apples 2 pineapples. Now, I know that some of you are saying, Eddie, who the hell cares about enterprise value? But I'm telling you, once you start doing fundamental analysis, it is important because a lot of people use the enterprise value metric when they go ahead and they analyze stock because they use it in financial ratios. So they take that enterprise value and they divide it by certain things. It's similar to earnings per share. Why do we care about earnings per share aside from what earnings per share stands for? Because earnings per share is included in a lot of ratios that could tell us a lot about the big picture and the small picture of a company. And just like with any other fundamental metric, you don't want to just use market cap and enterprise value when evaluating if a certain stock is a good buy or worthy of more research into. You want to make sure that you're using as many metrics as you can to compare side by side, and that way you can have a more fruitful evaluation of a stock. So thank you for watching this video in its entirety. I appreciate you for sticking around. If this type of content helped you out, help me out. Leave a comment, subscribe to the channel, give it a like. I'm going to cover a lot more things that are similar to this. I'll include cryptos, options trading tutorials, my own personal investment journey. You'll see some tech tutorials once in a while, and it's a journey, and I want you to come along with me on it. So I'll see you guys in the next video.